Welcome everyone. Here is the starting of another, oh hold on, I've gone too far, sorry. Okay, so weekly update. So for this week, just want to run through a few things that have changed just as a result of COVID-19 and what are we seeing in terms of a few people coming back in again, sorry. Okay, so apologies for the delay on this. Here's the agenda for this week. Looking at expenses, things that are changing that we're seeing from our clients claiming expenses. Looking at your home office, what's allowable, what isn't allowable. Government funding, there are some government funding opportunities still out there. And matching private investment, matching these with private investment. Business banking, trying to get more than zero. And a lot of you that are on this call are probably sat there with funds that are getting zero. And then just the Q&A. Goes without saying, with regards to how expenses changed, I mean, it's a fairly obvious statement that naturally things have moved on quite a lot. Obviously, travel has decreased. We're no longer using trains, tubes, buses, cars. Site-to-site costs have also decreased substantially. One thing to note here is we do need to be very mindful of subsistence and any recurring costs that you have running through the business. If you do have the typical £5 a day subsistence charge putting through the company, please be mindful that that shouldn't be claimed anymore whilst working at home. Looking at home office, try and claim costs for working at home. There are set rules the revenue have, and I'll run you through those in a moment. Things to note with regards to your day-to-day subsistence and working location. One of the key questions we've had prior to this has actually been with regards to the 24-month rule. Now, for those who don't know that, the 24-month rule surrounds the location of where your contract or place of work is being delivered. And if below 24 months, it's deemed that you are in a temporary location and as such can claim your travel costs, your day-to-day subsistence and any other site and moving around costs, then below 20 months, you can claim those costs. As soon as you knowingly exceed 24 months, then you're no longer allowed to claim those costs. And that would be all of the things I've just mapped out. If you can, it's worth having a conversation with your end client to see if they'll temporarily issue a different contract. And it would be directly in line with exactly what you're doing right now, which is working at home. As a result of that, you then move yourself away from the 24-month rule for claiming location-based costs, and you're then claiming your home office costs directly in line with the contract. It then frees up the 24-month rule to then start over again, because it's a never-ending clock that once you've got over 24 months in a certain location, it stops. And then if you then do another location, you then have another 24 months, etc., etc. So by intervening at this point during COVID-19, you could reset the clock, which would allow you to restart your 24 months, which is quite a good thing to do. So working at home, let's look at what the revenue thinks is an allowable expense. So this is the definition that the revenue have, that they'll allow you to claim the revised sum of £6 per week. It was £4 per week prior to the end of the tax year last year. And that's for anyone in the UK. You can just claim a fixed amount, £6 per week, no questions, nothing to talk about, and revenue will not contest that. You can do that through your self-assessment if you're self-employed, or you can claim that as a cost directly through your limited company. They won't allow you to claim any other expenses if you are claiming that fixed subsistence or fixed daily home allowance amount of £6. Notwithstanding that, if you believe that you're working at home more, which obviously we all are right now, then that's going to allow you to claim a far greater amount of money. Now, in terms of what's an allowable expense, I'll run through those with you. Things I would not do is I would not consider redevelopment of your home or office, adding a new extension, putting a new building in the garden, because the revenue then believe that's a capital item. We enter into issues there that you could end up with a back-ended capital gains tax liability upon eventual sale of your property. Or even worse still, if you started to claim an amount that became too excessive, and the revenue contested it, they'll do one of two things. They'll either ask you to refund all of the money to the company, or they'll consider that your part of your premises that you're claiming is actually a commercial unit. And therefore that means you then have a split property, partial residential, partial commercial, which leads to whole masses of issues in terms of you then end up with rates and business charges, rates and then council tax. And equally upon sale, it becomes almost impossible to sell your property because of the dual use. Things you can, however, claim, adding, a new desk, a chair, a filing cabinet, and rewiring the room to make sure that you've got capability, getting broadband added in, fiber optics if you're out in the sticks. All of those things, they're fine. You can claim those. So what is the difference in terms of how do you claim the additional sums that the revenue could allow you? So here's a worked example. If, for example, your total costs for running the home were £3,000, inclusive of mortgage, gas, water, electric, and all the other home bills that we're including, standing charges, rates and bills, then that's your total cost. If you then use 20% of the floor space for working, so that's your office that you're going to, or your study, or part of the home, the living room, that would allow you to be entitled to claim up to £600 a month for the total use of that room. Now, bear in mind, that is exclusive use of you being in that room, which so you wouldn't be. If you were then using the room for 25% of the time, which is probably more in line with where most people tend to work, so 8 hours a day, working in the office, and the rest of the time you're either sat in that room, chilling out with a beer, watching the TV, or watching the news about COVID-19, which is getting rather boring. That would allow you to claim up to £150 a month, which is certainly much more reasonable. What we have noticed over the years, and all the cases and all the claims we've put through for all of our clients, we found that typically up to £1,000 a year claim for home office doesn't tend to get too much of a look through from revenue and customs. And that's obviously the as was. As the as is now, with everybody working at home an awful lot more, I think the revenue would have to concede that a claim that is proportionally higher than the year before isn't something that they're going to be too alarmed with, and I think they're probably going to expect it when looking at the accounts. One thing to note with regards to this, it's all about the sort of data flow that they see coming through. So if we had year one with your accounts and it had £600 claim for home office, and then in year two it had £60,000, the variance is something that gets picked up by their very basic algorithms that they have. So again, when claiming your home office, just come back to us, talk to us, talk to your account manager. We can give you a simple calculator and we can help you overcome any potential challenges. And one thing I find quite funny about this is that recently, I don't know if you saw in the press, that the MPs have been allowed to change what they can claim for home office. And in my example here, if that were a typical person, you could claim £150 a month. They've been offered the opportunity to claim up to £10,000 a month for 3 months during the crisis. Quite unbelievable, really. Now, let's look at some other things we're going to try and cover today. So this is something that was really exciting news that had been announced back in April with a view that it was going live in May. And this is the Future Fund. The Future Fund is aimed at all UK startups and growing businesses aspiring to try and, trade their way through COVID-19. And what the government have done is they've launched with a British business bank the opportunity to gain access to a scheme for up to £250 million worth of funding, which will then be matched directly with institutions, high net worth investors, and people that are sophisticated investors. The funding is available on a convertible loan note basis, and I'll come back to that because it does become quite confusing. The scheme, as I say, was announced in April. When I send these slides across to you, you'll have full details available. It's about 25 pages of information to read. It's not too onerous. The convertible loan note details are probably more confusing. Now, once it's been read through, I think we need to then be very careful about what this all really looks and feels like. So the first key criteria, which is something that we hadn't anticipated, was that the company had to have raised the funds in order to qualify for the scheme up to over £250,000 prior to the 19th of April 2020. Now, bearing in mind this scheme was announced on the 20th of April 2020, what a lot of people did, they tried to almost circumvent the system, rewind the system, and try and get back in funding that they were just about to receive. I do fear that due to the audit trail the revenue are going to perform, and British Business Bank and also the VCs that are running these funds, they're going to find out that you've tried to hotwire the system, and I think ultimately that's going to fail. Just a few more details. Company can't, if it's part of a group company, the ultimate company has to be here in the UK. None of the shares can be listed on any stock markets or AIM listing businesses. It has to be UK PLC or limited company. Must have been incorporated before December 2019, which is kind of their benchmark for when either they knew about COVID-19 and didn't tell us, or it's just their yardstick for benchmarking everything regarding the B-bill schemes, the C-bill schemes, and ultimately the future fund. The company must have at least half of its employees in the UK and half of its revenue in the UK. And that's quite an interesting point there, because from the definitions that we've read and the lawyers we've spoken to, there isn't really a way of proving that, testing it, and reading between the details on some of the pages, there's some conflicting information. So if you do have any overseas revenue, and it tends to be significantly more than half of your UK sales, we can still try and apply for this and see how we go. You can still receive this if you've received other government funding. What often happens for these funds, and certainly for future grants, if you've received previous state aid and funding, you're often precluded from having the opportunity to go back into this and do the same thing again. I would, however, say, from delving beneath the surface on looking at these, I genuinely suggest this is only something you look at if you're very desperate for funding. And here is why. If you then look at the use of the funds, and then I'll come on to what you can actually do with it. Apologies for the dots on here. This was my daughter playing around on the computer, so apologies. Loan monies cannot be used for the following reasons. Can't be used for borrowings from a shareholder, clear down any previous debts or liabilities that you have, pay dividends, so you can't just receive £500,000 in and then just distribute it back to yourself. You can't use any of the funds to remunerate any discretionary bonuses to consultants, employees, or other people that are connected to the business. And you couldn't, for example, involve a broker in order to suggest they have helped you find funds, helped you find funding, and then pay them an enormous fee at the back end of it. Now, the kicker to all of this, and if you want further information afterwards, let me know, are the interest charges for the funding. It's 8% per annum that's chargeable every year that you hold the funds. It's a 36-month loan that the government are giving to you, so that's an 8% roll up over 3 years. The massive downside to this loan is there's a 100% redemption fee on exit should you crystallise this and repay the loan. So if you think about it, what that could mean is you, for example, borrow 125,000. You then do the same thing from private investors, because it has to be matched with private investment. So that's £250,000, which is a great sum to keep a business going and stimulate growth in a company. However, at the end of a 3-year period, 2 things will happen. You either say, I want to pay my loan off. Now that £250,000 that you have has what's called drag-along rights for the institutional investor or high net worth investor, or somebody that's just known to you. They would also have the same issue here, or they'd have the same benefit. You would have to repay them 125,000 each that you had borrowed from them, plus a further £125,000 each in order to clear down the loans. So that's £500,000 you've had to repay for borrowing 250,000 over a 3-year period, plus the interest of 8% per annum as well. Now, for those of you that are interested in financial columns and listen to other people like Martin Lewis, that stinks like almost like Wonga.com to me, because the interest charging is quite frankly outrageous. So, just bear in mind, if you are thinking of getting these funds, be mindful that 100% penalty is chargeable at the end of it, plus the interest charges. So for my money, the only reason anyone would take this is twofold. You're looking to build a relationship with somebody within the government, hence having their money on the table is allowing you to gain access to contacts, government contracts, or people that you can influence your business. Because that's one key thing. The second thing is, the only other reason you'd want to do this is you believe that your share price is not going to rise substantially over a 3-year period. And as a result, you don't mind giving them the other option they have if you don't clear down the loan. And that is that you pay they get their shares at a 20% discount at market price. So if your shares worth £100 at that point, they would get them for £80 per share. So they're the only two reasons I think you'd want to do this. If your growth is fairly stifled and you don't envisage your share price flying through the roof, or you need the government in order to get into the G Cloud and do government contracting and government work. Now, when I had done these slides, the objective here was we thought the Future Fund was going to be open to almost everybody. And for those that were getting investment, seeking investment, we found a partner that we were working with that was going to match the funding that any of our clients got through the Future Fund. Now, clearly, in my opinion, and again, looking back at some of the things that we think have gone on here, I just don't think that everyone's going to subscribe to these, all of these points here. And I certainly don't think anyone's going to want to take the money at 100% plus 8% interest. Notwithstanding that, as I've done these slides, I will continue. And a company that we're working with, this is a client of ours who's been in business and with us for over 15 years. And they were really keen to try and invest in forward-thinking technology businesses that are part of our Rodliffe accounting group. So they're happy to invest in AI, blockchain, medtech, general tech, or even other sectors, that are forward-thinking. And certainly in light of COVID-19, there's going to be lots of different businesses that need funding and going in slightly different directions. So if you have received any match funding, if you have received previous investment, or you're looking for new investment, drop me a line and I can connect you to the guys there. And between us, we can help you with the pitch documentation, the general documentation about your business, all of the forecasting and planning. And if there's an appetite on their side and your side to do business together, then naturally we can hook you guys up. Now, notwithstanding that, there are other grants that are going to become available. These aren't necessarily to do with COVID-19, coronavirus, or the current state of the economy. These grants, ignoring research and development, which is an entirely different matter. And if you are incurring R&D costs for building your business, growing your business, and growing a product that is unique and different in the marketplace, do let us know. We can help you with an R&D claim. But aside from that, there are lots of grants that Innovate UK are offering. There's lots of local, lots of national, and lots of even EU grants that are still available out there. And what we are finding is that, there's probably grants ranging from £1,000 up to well over £1 million available for UK SMEs. And we've got access to the grant platform. So if you do think you qualify, or you're thinking of getting something, doing something, or you believe you're conforming to one of these things, you're a UK company innovating in some form of technology, you will have a socio-economic benefit, and you must be solving something that's unique and different. So I don't know how, an example here was Dyson. He actually managed to get grants back in the early days. I don't know what hoovering issues he was actually trying to solve, but naturally he's become one of the most successful and profitable businesses and people in the UK. Moving on from that, this is just a bit of homework we were doing. So I've been doing this while I've been sat at home, sitting a lot with a lot of screen time, and looking at their clients, looking at what's happening, what's influencing their business decisions, what's going well, what's not going so well. And one of the things that I found that isn't going well at all is business banking. And I flagged this in the last session we did last week. What we have ascertained is just through looking at the data feeds that come in through Xero, through Free Agent, we have client funds sat on deposit at well in excess of about £50 million. Now, this is over and above the day-to-day requirements for general cash flow funding, payroll, VAT returns. This is cash that's just been sat there for a heck of a long time. And that money's sat there getting 0%, which just to me doesn't make any sense. So as another part of the process working with the investment capital firm I've mentioned, they're offering our clients 2 opportunities to move their money if they want to. And this isn't us selling stuff to you, just telling you what's out there. And these 2 options they've got something called the 123 account, which sounds very much like the Santander 123 back in the day. The interest rate on that particular plan, which is a 1-year, 2-year, 3-year, is between 1% and 3%. The 3-year, if you want to lock it in for a bit longer, if you've got funds that are just sat there, you don't need them for pension funding, general cash flow, but you don't want to lock it in for the long haul, 3.5% for a 3-year fund. Now, I love free money, so what does this really mean for you guys? If you think about that dormant money, if it's sat there for 1 year, if everybody listened and said, that's a great idea, David, that's £500,000 of money that you guys are going to get compared to nothing at all. If you put it on a 3-year, which I probably wouldn't recommend because that's maybe too long for everyone, but it may be for some people. I think there's a blended rate that may go here. You know, we're talking about £1.75 million worth of cash that I think is available sat there for you guys. If you do want any information, give me a shout. There's a little website link down the bottom there if you want to have a look at it. We're happy to help you try and look at this and anything else that you think is of interest for you. So that's kind of it for today, guys. I'm going to try and get to the Q&As that we didn't get to last time because my system wouldn't work. So I'm going to stop sharing the screen and see if there's any questions that you have. Bear with me. Okay, so questions we've got from the team. So, okay, can I charge cost of installing aircon in the home office? Interesting question. If you said it was to cool down servers that you had sat in your home office, then the answer is yes, because you clearly need that in order to continue operating and running your business sensibly. So yes is the answer. You could do that. Are there any other questions anybody's got in relation to anything that I've mentioned so far? No other questions? Okay, so to summarize, talk to your accountant or your account manager in the team if you've got any expenses that you know are recurring and that you think shouldn't be recurring. So just let us know, and if we need to amend them, we will do. If you want the home office calculator, just ping me a note or ping one of the guys in the team a note. We're happy to send that to you. If you are looking at government funding, consider the future fund, but please do so with a lot of caution. It isn't quite what we thought it was. And if you are looking at it, read the loan note details because that's got a lot of information in it that for me is a wonga.com that I wouldn't touch with a barge pole. If you're looking for institutional investment or you want somebody to partner with, that you want to leverage their experience and get more growth in your business, then happy to help. And certainly if you're looking at the banking side of things, if you're fed up getting no interest on your money, move it somewhere or have a chat with us about Appetite Capital and we can help. One other questions. So are there any cost restrictions on buying home office furniture or equipment? No, I think as long as you're being pragmatic and sensible, one thing I would always say is don't go and buy antiques and things that are very expensive because they're a hard one to deal with because they're a depreciating asset that actually goes up in value. So they go kind of the wrong ways on your P&L and on your balance sheet. So anything sensible, you don't have to just go. You can do. If there's anything else you want to try and buy that's a bit more costly, let us know. Just always practically within reason is what I would suggest. Any other questions, people, before you all disappear and have a glass of bread and chill out on a sunny Thursday evening? No, looks like we're done. Okay, so great. Well, thank you, everyone. What we'll do, if there's any requests for things you want us to cover, be it tax, geeky, finance, if there's anything you want us to cover off in these sessions, it really is all about helping you guys out and making sure we're adding as much value as we can. So if there's any points you want to try and cover off, just ping me a note. I'm happy to try and tap into whatever you're thinking about and whatever you want to try and do. Failing that, next week, I'll send a list of things we're thinking about covering next week. And until then, have a lovely evening, have a lovely bank holiday weekend, and I'll see you soon. Take care.